Hi everybody, it's Chris from Serene Education with the 4 majors notice update for the 12th of October 2012. Okay, let's have a look and see what's been happening. Yesterday, beautiful bullish engulfing candle here at support. As I mentioned on this institution moving average, we want to see a bullish engulfing candle, and that would dictate that we should be seeing price potentially moving back up towards this area here at 1300, this price support and resistance level. We could actually look at the prior highs are getting a lot lower, so we could potentially look at this 1300 as our next target to the upside. Nice bullish engulfing candle on a support. Notice the histogram on the other side is still looking positive. We do have a red arrow though, however, so diving into our hourly and 4-hour charts, let's see if we can see price finding, let's see if price can actually stay above this 12,900 mark here intraday, and if that's the case, then we should be looking for an increase to the upside. Here we go on our 4-hour chart. You can quite clearly see, if I get rid of this little intermediate trend here, was broken yesterday. We wanted to see price failing here and falling back. That failed to materialize when price broke above it. RSI is above the 50% line. Institution below price. Everything's looking fantastic over here. The only thing we're going to really wait for is a nice break of this consolidative range on the 4-hour chart. You can see a lot of support and resistance here near term. So break above here, and then ultimately you should be targeting the upside. So nice little 4-hour close over here above these prior highs. The high, say, for 1290.52. And we should get the all systems go to at least the 1300 as our first target for the intraday end of week session. You can see on the hourly chart, my entry chart, you can see quite clearly the institutions in play here. Everything else is looking good at the moment now. However, we do need to see a break and close above this consolidative range. We don't trade indecision. You can see a lot of indecision here, a lot of wicks. We want to see a decisive candle, a nice bullish engulfing candle, and that would tell us straight away that our momentum is still looking in favor to the upside, and we should be targeting in that case back towards the 1300 as our first target. Moving on to sterling, let's have a look and see what's happening on the daily. Yeah, you can see I've taken the fib from the June low to the current high at 16,300, which happens to be our prior resistance level, and you can see that price has just recently broken below the 23.6 fib retracement area, and you can see price is now consolidated at the underside. If we are to see price continue to the downside, we do need to see price now failing at the underside of here to tell us this is now a resistance level, and price would continue on her run to the downside. Notice we have two parts of our histogram or strategy set up. We have the red arrow and the red candle. However, the histogram on the other side still remains blue, so telling us that sentiment is still looking positive. We would need to see the histogram on the other side going red. I would think to see, I would presume that the candle, the bearish engulfing candle that would precede a potential resistance here would give us that indication, and then we should be looking long term for further areas to the downside. Our first target here at 15,900, and then followed by the 15,800, which will take us back towards the institution moving average below us. So it will remain to be seen if you can see a resistance level intraday at this area. You can see on the Asian session last night a very indecisive trading range after yesterday's bullish engulfing. So we had two indecisive candles with a bullish engulfing candle, which now is a decision candle, but that decision candle is coming into a prior resistance. So is this telling us, listen here, this is a breakout, the pullback, and now we're going to see consolidation and the continuation in the direction of the breakout. So on the 4-hour, what we want to see now is price failing at this level, and you can see now we are trading at the underside of the institution moving average, which is a negative signal. So if you can see for the first time since August, you can see price is now trading at the underside of the institution moving average. Lower swings depicting price action is still moving away from 16,300, and all our moving averages above price. So you can see RSI is below 50, and these highs over here, these capped highs are getting lower, so it's also telling us that prices or relative strength is in the direction of price, which is what we want to see. So now we want to see price failing now at this level, and if we do get that, then we should see potential for price to continue to the downside. So we need to see a bearish engulfing candle at this level, at the underside here, to tell us that yes, we should be looking for lower lows, and we should wait for ideally the red arrow followed by a red candle, and everything will be in favor for further downside movement. US dollar Swiss franc, let's have a look at this one on the daily. You can see quite clearly that price has been moving to the downside after heading into that 1,000 mark above us, major resistance. But most importantly, near term, you can see price is now battling with the institution moving average here between 940 and 9,300. For price to continue to the downside, we do need to see this particular consolidation range over here being broken to see further negativity long term. If we get below all this consolidation around here, then price should definitely fall quite nicely to the downside, accelerate to the downside quite rapidly. So either one or two things have got to happen. You can see the histogram on the other side still remains negative. You can see that we're making lower swings, which depicts that we are in a downside trend, intermediate. Overall, you can see where prices be coming from. August low right back here last year. You can see we've been trading higher. Just recently, trading above the institution moving average, but recently, as I mentioned, just trading below it. So if this is now becoming a new resistance level, ideally we'd like to see price continue on the downside. Yesterday's candle, after the spinning top of resistance, it looks like near term we should be looking for entries to the downside towards that 9300 as our first target. It's nice here because we could make roughly around about 40 pips to that level. Ideally, long-term traders, guys, you want to see a break of the consolidator range here. Otherwise, you're trading in a consolidator range. Yes, you can make money in it, not a problem. There seems to be a nice movement between 2 points. There's 100 pips in the other direction, which is fantastic. If you're looking for further confirmation, look at the break of the low here at 925 would be a lot better. Or wait for confirmation break above this 940, which happens to be a major resistance level. We would have to take some really good news over here to see price really moving above these levels. So as it stands at the moment now, sentiment is looking negative, so we should be trading in the direction of that negativity, and it looks like it should be lows. All the moving averages below, above price, acting resistance. Everything's looking for negativity. The only thing, if you're looking at this daily as an entry, is the fact that we have a blue arrow. However, you look at the candlestick setup, we have resistance quite clearly just recently. We've had another buying sentiment into this resistance level followed by an indecision. You want to see a decision candle. Yesterday's decisive candle moving away from it is confirming this is still resistance, and now we should be looking for the downside as our first target towards that 9,300 mark. Moving on to the last pair of the day, the US dollar Japanese yen. Let's have a look at the daily, and you can see yesterday's bullish engulfing candle at 78. I mentioned we would see some selling into the 78 range before we saw potential for consolidation, because it is a major support and resistance level, and sure enough we got that by the end of play yesterday. Moving into the 78 during the first part of the day, and then bouncing higher up to these highs before we saw a price pullback. So as it stands over here at the moment, you can see now that these highs are still getting lower. Swing low, swing low, swing low, swing low. We're being squeezed now between the 78 and this downside trend. Institution still above price, and moving averages 20 and 50 are pretty much flat, so it's telling we're in a consolidative range, and sure enough we are, because we're trading at the major support here at 78. Look at the histogram on the other side, still negative. There's 1 or 2 areas of blue, however that's buying sentiment over here wasn't true at the time, so there was no trade to be taken. But histogram telling us that we should be still looking for negativity, and these highs are getting a lot lower. It's telling us we're being squeezed. So 1 or 2 things could happen. We could see price now pushing lower again. So it's very, very important to just be careful as we head into this consolidated range. You can see these lows here are definitely getting a lot tighter near term. So just be aware. A lot of wicks. There's nothing here with full bodies. This is a nice bounce over here, but it's not a really genuine candle because price is trading in the mid trend of it, and we have a lot of wick on either side. We want to see more of a decisive candle, which will be confirmed as genuine support. The Asian session range is quite indecisive as well, a lot of wick to the upside. So it's imperative that we just bide our time going into the end of week. We could see a little bit of less volatility or that momentum required. So one thing to remember, as long as it maintains above 78 though, we'd ideally like to see price moving to the upside. So as long as it moves sideways at 78, then it could be potential for price to move higher. However, I feel if we start seeing more and more of these swing lows and price gets lower and lower and lower, eventually it's just going to pop to the downside, because that sentiment is still looking negative and it's weighing quite heavily on price action. So as it stands now, you've got to see, as long as price maintains above 78, then look to the top side. However, if anything, you'll probably find that your targets will be capped here at the prior swing high here at 78.70. So not much in this to the upside. You'll be trading with a lot of risk attached to this particular pair. So in this one, I wouldn't be trading it for the time being. That's it, guys. End of week. That's analysis for this week, for today as well. So if you are in any trades, just manage them. Just look and see if there's any news announcements today that could factor in price action. Other than that, follow the rules of the strategy template, back it up with sound money management, and you shall fare pretty well. Okay, have a great weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serenely.